Oh man, are we heading for a big bounce here on Bitcoin? Are the shorts going to get squoze? You can see here Bitcoin holding up pretty resiliently despite the ongoings geopolitically. We covered that off yesterday. We saw a big shake in the markets. Originally, oil jumping up 4% yesterday, now notching down today 1%. Is the market starting to understand that, okay, maybe this isn't the end of the world. Maybe we're not going to get the World War III situation, and the investors are starting to just load on some of that risk again. Remember, we saw this with the Russia-Ukraine tensions as well. Whenever there is some global tension, investors rush to take risk off the table, right? They act now and then they ask questions later. Just get the money out of the shady places. And so we saw Bitcoin dominance climb. We saw defensive stocks do really well yesterday. Nobody wants to be in growth assets. Nobody wants to be in NASDAQ stocks. Nobody wants to really be in Bitcoin or in particularly the altcoins, right? And we saw that start to happen. And then once people have time to assess the situation, you start to see some of that money rotate back in. Now, will we see a really powerful bounce? I mean, the first thing we want to look at is, of course, we saw the oil prices are kind of just settling a little bit. Then we look at the fear and greed index and it's sat at 50. Right? It just did not budge, which is very interesting given what was going on. We didn't see a crazy movement here in the crypto fear and greed index. If you take a look at Bitcoin, we're still sat pretty fairly, right? We're kind of sitting here. Yes, we had a bit of a candlestick going up and down. So we got a bit of a wicking candlestick here. But we're sat here at 27.5. Bitcoin's holding okay. It's still above its daily EMA ribbon. And so the question now is, will Bitcoin be ready to bounce from this EMA ribbon powerfully and move to the downside? And what would the set of circumstances be for this to happen? Because remember, we've got a really, really important week coming up. So I'm going to break down exactly what we're expecting and some of those key levels. If you want to join our free Telegram group, ijaz.uk/TG is the place you're going to want to go. There's also a VIP signal group too, where you can see the exact trades and setups I'm taking. So check that out. Links in description. If you're looking to trade, Bybit and BitGet are the two exchanges I'm currently using. Links in description, which also support the channel and give you some amazing bonuses. Okay, so we can see that here. Let's also then notch over to see how the pre-market's doing. Because not the pre-market, the US markets are doing, because they've opened up pretty positively here, right? NASDAQ making up for some of its losses yesterday, up 0.87. Seeing the S&P up 0.75%, and the Dow Jones up 0.5% as well. So the US markets are kind of bouncing back some of that turmoil for yesterday. Of course, if we jump on over as well to take a look at how the dollar index is performing, you can see the dollar index just a little bit of a cooling off after a very powerful day yesterday. So you can see yesterday, risk was off. Dollar index moving powerfully to the upside. Of course, that is not good for crypto. So do not be surprised to see here on the daily chart, dollar index want to call off a little bit. It's so very extended. Just like it called off here, it might want to call off here and try to collect some support from the EMA ribbon before heading higher. And if it does, that could mean that Bitcoin could be ready to do the opposite. Bitcoin could look to bounce from its EMA ribbon while the dollar index is retracing. Remember, these two assets are inversely correlated. When risk rotates back on, the dollar index falls to the downside. That is good for Bitcoin. Okay, so we've got to monitor that. The other thing we're starting to see is, if we take a look at exactly what happened here over the last couple of days, you can see that initially when we heard of some of the news on Saturday, you saw a little bit of money flow out of crypto, right? We saw 1.8 billion flow out. The next day, again, not too much of a reaction, 1.2. Where you saw the money start to flow out was on Monday, was yesterday, once the traditional markets opened back up again. So it's interesting to see that it's not retail volume. It's probably a lot of institutional money flowing out of crypto on Monday, because if it was retail, you would have panicked your sales on the weekend when the news started to break. You wouldn't have had to wait to a Monday. You're waiting to a Monday if you had a broker or if you had a wealth manager that you needed to execute that trade for you, right? In which case you wait till Monday. We saw 13 billion of outflows. Today we've seen a stemming of that bleeding. So we've not seen massive inflows in, about 1 billion trying to come in today there or thereabouts. But again, got to work our way back up here on total. Of course, we've taken a shaking there. Hold up, guys. If you're looking to actively trade and you're not in our free Telegram group, ijaz.uk/TG, make sure you're in there. I share free trade alerts plus TA setups of exactly how I trade altcoins and profit successfully. Also, there is a VIP group where you get regular VIP trade alerts with the exact trades I'm taking. So definitely check that out. ijaz.uk/TG. I'll see you on the inside. If you also look at the altcoins, you're starting to see altcoins kind of just get a bit of a mixed bag here again after yesterday's kind of bloodbath. And again, I said this. I posted a video saying, guys, this is going to be painful. Bitcoin's going to dump, and a bunch of people in the comments were like, oh no, you're just using this for your own gain, this is a war and you're trying to make this about crypto. No, I have to show you guys what's going to happen from an investment point of view when these geopolitical issues come up. And you could see here 3 consecutive days to the downside here post that. It's a very natural reaction. And now you want to see, is that risk going to be reapplied back into the market? And it's all going to depend on the certainty or lack of certainty in the market. So if we see escalation, if we see the US escalate it or get more involved and it means more spending for the US, that could also have an impact as well. And there's something also very interesting going on here in terms of a long-term perspective. If we take a stock of where we're at in this market right now, Jerome Powell, to all intents and purposes, is maneuvering a soft landing. He's managing to bring inflation here to the downside. He's managing to keep the labor market pretty strong. But then what is the excuse for the US to print? What could be a reason, even in this situation where everything looks so okay, for the US to still go, hang on, even though the economy's doing really well, we can still print and stimulate the economy. And that would be another war, right? Another war would allow the US to continue printing money whilst keeping the public on their side too. So we got to keep that factor in mind as well, is that this could be a reason for the US to start printing again, loosening monetary policy. And that could be very, very powerful for Bitcoin. Because remember, the more you print of fiat currency, the more you increase the money supply, the more money goes on to risk on assets such as crypto and altcoins. So this is in favor of the crypto market. If the US wants to go print more money, get themselves into more debt to go support other causes. We know they already got that issue with the Russia-Ukraine situation. We know that now you've got the Israel-Palestine conflict. If they're going to keep printing to go and fund those, even though that the economy is doing okay, right? Inflation is coming to the downside. Labor market is strong. Jerome Powell's navigating that soft landing. There's no need for printing just yet, according to the battle against inflation. But if it happens due to a geopolitical issue, that could have ramifications in our investments too. So you guys have to be clued up on that as well. So then what have we got coming up? Today, you've got a bunch of Fed officials speaking, right? So make sure you're staying tuned for those guys. You got Fed Walla, Fed Kashkari, and Fed Daily. All 3 of those will be speaking today, and they can mildly move markets. Again, I'm not expecting massive shakes. Where I am expecting massive shakes is tomorrow. Tomorrow we get 2 really important pieces of data. The first is going to be your PPI inflation. Make sure you stay tuned for that. I will be bringing you the update as and when it comes out. You then have Fed Walla speaking, but more importantly, the FOMC minutes later on tomorrow. Okay, so later in the day tomorrow, you will get the FOMC minutes, which if there is anything significant or any dissent amongst the members or they're fighting over what they think they should do in terms of monetary policy, markets will want to read that and they may move on that news as well. Then going into Thursday, we get the CPI data, okay? So it's non-stop this week. We get the CPI data, which again, very important for the FOMC. Currently, markets are not expecting, it's actually reduced here. You can see less and less of the market is pricing in a rate hike in November. They're thinking we're going to get a pause in November, and that's what they're expecting in 3 weeks' time. So we'll keep an eye on this to see if this changes once the PPI data comes out and once the CPI data comes out as well. So jumping back into the Bitcoin chart, we're sat here trying to hold the EMA ribbon as daily support. Very important level, right? Even if it wants to come down here into the depths of its EMA ribbon, 27.1, that's absolutely fine, but it needs to bounce from there. If we lose those levels, remember your next support isn't down to 26.2, and I want to show you this graphic as well, because there's a lot of liquidity in this market to be grabbed. You can see from about 25.5 all the way up here to 26, there's all this green liquidity to be grabbed, and then you've got a bunch below 27,000 as well. All these green areas are liquidity grabs, so maybe market makers will want to move the market, dip it a little bit, get below 27,000 for a little bit, pick up that liquidity before a bigger move to the upside. So that's something else that I'm monitoring as well. If you want more of my real-time updates as and when they happen, make sure you're in my Telegram group, ijaz.uk/TG. If we look at the weekly chart, you can see we are managing to hold our weekly EMA ribbon, which is very, very good. As long as we hold above that, that's pretty good considering what's happened this week, right? So yes, there's pain in the markets, but eventually it will settle, markets will feel more positive, and we should start to see that money start to flow back in. So what I am impressed by is the relative resilience. I mean, if you look at, given what's happened, yes, we've lost our 4-hourly EMA ribbon. We've been rejected by the 4-hourly EMA ribbon here over the last candlestick as well. But as soon as you come into the daily time frame, you start going, hang on, we're still above our daily EMA ribbon. It's not too bad given what just happened here over the weekend. So there you have it, guys. My reflections on where we're at in this current market. Lots going on and lot to keep your finger on the pulse on. If you want to do that with me, ijaz.uk/TG. Check out the VIP group there as well. And I'll see you in the next one.